Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And well, big news today. Capital One will acquire Discover Financial Services in a $35.3 billion all stock deal. And Brian, Capital One's net income dropped 35% in 2023 versus 2022. But now they've gone and bought a bunch of debt in a stock swap
Yeah.
and in an environment where delinquencies are on the rise. What's happening? What just
Well,
happened?
this deal is basically going to make Capital One one of the largest credit card providers in the country.
Jeez.
How big? Capital One was ranked number 4 and had about 10% of the market share in the United States. Discover was ranked number 6 with about 8%.
So
So
these,
combined,
yeah, it's a lot. It's
it's a
big.
lot.
So these two companies, this is a merger, correct?
Yes, it's a merger.
Okay, so these two companies merge and consolidate all the debt under one umbrella company. So
And you're questioning why now?
y- yes, I am. Thank you for mind reading. Because according to New York Fed data, credit card balances increased by 50 billion to 1.3 trillion in Q4 of 2023. But
Yep.
never in history have we seen so many people take on so much debt, but only be able to make that minimum payment, which means they're never going to get that paid off. And
Nope.
not to mention, credit card and auto loan delinquencies continue to rise, most notably among young borrowers.
Well, this makes sense if you're Capital One. According to this AP News article, Capital One has a long business model history of looking for customers who will keep a balance on their credit cards.
Mm.
And they aim for customers with lower credit scores than American Express or even Discover. Think
Okay,
about that.
so based on what you just said there, they don't actually care because they want people who are going to keep that balance.
Well, remember, you just said it up front. People that never pay off that debt and it takes
Right.
them 30 some years to pay it off, right? Well, who wins? The credit card company wins during that. So, yes, that's the customer that they look for.
And I guess what I'm saying then too is even despite increases in delinquencies, and we can just probably predict they're going to get worse in the coming months, Capital One might not care.
Yeah, no. And after battling inflation for more than 2 years, many lower to middle income Americans have run through their savings
Yeah.
accounts. And guess what? They're increasingly running up their credit card balances and taking on personal loans. So,
Yeah.
in Capital One's eyes, it's timing to
Sure.
do this.
Sure. Do you think that the Consumer Protection Bureau will allow this to happen?
Honestly, I believe they will try to stop this because think about this. This will allow one company to hold nearly 20% of all US credit card debt.
I would hope so because from where I'm standing, it seems pretty reckless. What happens if delinquencies keep rising? Are we taxpayers supposed to bail them out? So should something happen?
I'm glad you asked. Both lenders have added to their pool of money set aside to guard against these defaults.
Hmm.
Last year, Capital One's provisions for loan losses rose 78% to 10.4 billion and Discover more than doubled theirs to 6.02 billion.
So they're preparing for this.
These deals this big do not happen overnight.
Well, yeah, good point. Good point. Okay. All right. So one final question for you. Will people should this go through, will people still be able to use their Discover cards or will it switch to a MasterCard or Visa?
Now, this will continue. While Capital One uses MasterCard and
Yeah.
Visa as their primary for their banking, they've stated that they will keep the Discover name if this all goes through.
Hmm. I really liked my Discover card the way it was.
Me too. I got the beach one. It's a
Yeah.
nice one.
I'm so bummed. I'm like, no.
They're good people too.
I
So
love Discover. Oh
yeah,
gosh.
great
All right.
commercials too. So
Oh my goodness. Okay. Well, it's about all we have to report on this, but just wanted you to know what's going on
definitely.
and just know the facts because I think that's the most critical thing right now that we can do is to start thinking accurately and thinking for ourselves and stop just reading headlines. Would you agree, Brian?
I agree 100%.
There you
So
go. Okay. If you like the content of this video, hit that like button. Don't forget to subscribe. Brian and I put out videos on the daily that help you make better decisions for your financial future.
definitely.
Brian, thanks so much for this. Appreciate it. And as always, thanks to everyone who watched.
Thanks, everyone. Have a great day.